A big question that lawn care service owners ask me is how do I calculate my profit per stop or profit per lawn? Most landscaping business owners have no idea how much money they actually make on every lawn. They know what they charge. They might even know, the total revenue number per month or per year. But profit per stop, that number is largely invisible, and that invisibility is costing tens of thousands of dollars in your business. In this video, I'm going to show you exactly how to calculate profit per lawn, what a healthy number looks like, and what to do when your number is too low. If you're going to know your numbers, know profit per stop or profit per lawn. Most lawn care services, landscaping businesses, they're looking at total revenue. I ran $1 million last year. I ran at $500,000 last year. That's a vanity number. Revenue is a vanity number. What I mean is you can do $1 million of revenue and take home almost nothing. And plenty of companies are doing exactly that. Profit per stop tells you the truth. It tells you whether each account is actually worth having. Helps you identify the losers and the winners. It tells you whether your pricing is right, tells you where your money is going, tells you whether you're efficient or not in your operations. Think about it this way. Let's say you have 80 accounts and your average profit per stop is $12. If that's the case, you're running a charity. If, on the other hand, your profit per stop is $45, you're running a business that can scale. The number really empowers you. I mean, without it, you're guessing. And the formula is much simpler than you think. You don't have to be an accountant. You don't have to be a numbers nerd to be successful in this business. You just have to have common sense. I'm guessing you have that in spades. And you take the common sense, you track your profit per stop, you view that against what your goal is, adjust your activity, go back, monitor again, adjust your activity. So you're tracking this number weekly. And as you're doing it, you're just turning up the profit and cash flow in your business. The formula is much simpler than you think. Profit per stop is basically what you charge minus your direct costs, and then also subtract out an allocation of your overhead or your indirect costs. So let's break that down. Revenue per stop. Well, you know what you charge a customer, right? Nationwide, lawn cuts generally run anywhere from $40 to $60 on average. $50 may be the sweet spot. Now, you're going to do more for better neighborhoods, bigger lawns, but let's just use $50. Then you've got your direct costs, okay? Labor, which is how long does the crew spend on that lawn, multiplied by their loaded hourly cost. What do I mean by loaded? I mean taxes and benefits that you're paying them as well. Fuel, and then any materials you may use on the job. Now, typically, you don't have any materials if you're cutting lawns, but if you're doing other upsale type services like mulching and so on, you're going to have the cost for the mulch. So that has to be taken out. So again, revenue $50, direct costs like labor, fuel, any materials to that specific job, and then subtract out one other thing, which is the tricky one, indirect costs. You might call it overhead. Your overhead would be like your insurance, your equipment costs, truck depreciation, software, even your own salary. Those things don't disappear just because you're on a lawn. You need to divide your monthly overhead by the total number of monthly stops. That'll give you a per stop overhead number. So once you have all three, the revenue, the direct costs, and the overhead, the math is simple. Revenue, let's say you charge $50, minus direct cost. Let's say your crew spends 25 minutes on the job. Your loaded labor cost is $34 per hour for two in this crew. So labor for that stop over 25 minutes is $14.16. Add a couple dollars in fuel, you've got direct cost of $16.16. What about overhead? Well, let's just say your overhead is $8,000 and includes your insurance, equipment depreciation, your salary, what do you take out of the business? Let's say you run 300 stops per month, okay? 75 a week, 300 a month, 15 a day. Your overhead per stop is then $26.67. It's 8,000 divided by 300 stops. So here it is. Your profit per lawn is the $50 you charge minus the $16.16 in direct cost, and then subtract out the allocation of overhead, which is $26.67 per lawn. That comes down to $7.17 profit, less than $10 of profit per lawn on a $50 service. Does that feel right to you? Most owners, when they run this number for the first time, they're shocked. But that's okay. You need to know what it is in order to improve it, right? You can't grow what you don't know. So know the number. If it's 750 or 1250, I mean that's really where you should be minimum. But if it's less than 750, you got problems. The higher your price, of course, here's the good news, the more leverage you have. A $75 lawn is going to give you more profit per stop. A $120 lawn is going to give you much, much more. This is why raising prices is kind of the highest leverage move to build a better profit. Not grinding out more stops, but just raise the price. $5 can be huge. If your number for profit per stop is below 10%, you've got a pricing problem. So in other words, if you've got a $50 lawn, your profit per stop is $5, that's a problem. If it's a $60 cut and you're getting a $6 profit per lawn, that's a problem. Um, but here's the deal. It's about fixing problems. It's not about just, oh, this is bad. I'm not making enough money. No, you're in business. You've got common sense. How do you fix this problem? You're still in business because you're a problem fixer. Here's how you fix a profit problem. It's three ways. One, I just talked about it. Raise your prices. It's obvious. It's hard to do though. But, just think about it. A $5 increase across 80 stops, that's $400 per week, $1,600 a month. So do it. Raise prices. The second is reduce your direct costs. Okay, so what are we looking at? Well, you got to tighten your route density. Don't run from one zip code to another or spend less time between stops. And a lot of it just comes down to training and accountability. You really have to be the boss. It's okay to be the boss. Continually monitor how long are they on the job. How does that compare with the budget for that job? If you budgeted 25 minutes and they're taking 30, you're leaking profits. So, you know, be the boss. Make your team accountable, train them on how to become more efficient, to get work done in a quality manner, with a spirit of excellence, but to do it more quickly. And then third, you just want to control your overhead. And this is really a big one because you have to know what you're spending. Whatever's not generating revenue, you need to cut. Every dollar you remove from your overhead drops straight to the profit line. Some costs are going to be pretty fixed. Insurance can be a fixed deal, but equipment costs, you don't have to buy a new piece of equipment because you've got all kinds of different services you're offering. Be more focused. Hone in on what the most profitable thing you can do is and what's most scalable. Often that's lawn cuts. Focus on that, equipment for that. We've built a free profit per lawn calculator that does a lot of this math for you. If you'd really like to get a handle on this number, click the link in our YouTube profile or in the description of this video, and there will be a link to our free profit per stop calculator. You just plug in your revenue, you plug in your labor cost, you plug in your overhead, and it shows you exactly what you're making each stop. Know your number, grow your profits. Well, that's it for this time. If you found this helpful, please hit the subscribe button, and we'll see you next time.